Hello, everyone. My name is Yannick Beauvalet. I am the Director of Consultations and Stakeholder Engagement within the Public Affairs branch here at the Canada Revenue Agency. I want to start by thanking all of you for taking the time out of your busy schedules to attend this information session on the GST HST break announced on November 21st and scheduled to run from December 14th, 2024 to February 15th, 2025. While we may not have the answers to all your questions or concerns, we wanted to ensure we provided you with the most up-to-date information and that we have an open line of communications with you. We know this is a very hectic season and appreciate your time is precious. Please note that the compressed timelines on this initiative have also given us only a few days to put this session together. As such, we appreciate your patience and understanding should we have any technical difficulties. Given that we have participants from across the country, I would like to take a minute or two for a land acknowledgement. The land acknowledgement is more than just a symbolic gesture. It is a recognition of the history of Indigenous peoples and their ongoing connection to the land. It also highlights the way this territory has been defined and offers us an opportunity to deepen our understanding and strengthen our relationship with Indigenous communities. I would like to acknowledge that I'm joining you today from the unceded territory of the Algonquin Anishinaabe people. I would like to invite each of you to take a moment to acknowledge the land you are on and on how lucky we are to live on this amazing and diverse territory. Today's session is scheduled for approximately an hour, maybe a little shorter, and will feature a number of speakers. From the Canada Revenue Agency, I'm joined by Lord McMaster from CRA's Legislative, Policy and Regulatory Affairs branch, by François Delaurier from the Assessment, Benefit and Service branch, and by Sahil Bihal from the Compliance Programs branch. I'm also lucky to be joined by representatives from the organizations representing some of the most widely impacted business groups. Alicia Lee from the Canadian Federation of Independent Business, Jessica Brandon Jepp from the Canadian Chamber of Commerce, Richard Alexander from Restaurants Canada, and Luke Chapman from Beer Canada. They will each have a chance to ask a few questions following a short presentation from our CRA subject matter experts. But first, a little housekeeping. Live links will be shared in the Q&A tab. Please also note that we will be recording this session. If you would also like to use the live captions feature, you can turn on the closed captioning using the language and speech tab in your settings. Please note that the primary purpose of this session is to provide you with the necessary information to help you understand and apply the GST HST correctly during the break. While Bill C-78, known as the tax break for all Canadians, is still subject to parliamentary approval, we still wanted to meet with you to share what we currently know and address some of the larger questions we have heard. That said, it's important to note that what we are sharing with you today is if the bill passes without any amendments. We encourage you to keep checking our GST HST break web content on canada.ca for the latest information and guidance. It really is the best source. Now, enough from me. I will turn it over to Lloyd McMaster to take us through an overview of the GST HST tax break and the qualifying goods. Lloyd, à vous la parole.
Thanks, Yannick. So I am Lloyd McMaster. I am the manager of the Strategic and Emerging Issues Unit in the GST HST Rulings Directorate at CRA. And I'll go through some of the information regarding the tax break and some of the rules from a high level. The first point is the period and understanding the period that the break will take place. So it's from December 14th, 2024 to February 15th, 2025. And effectively, businesses do not charge the GST HST on what are qualifying goods and services during that period. So what type of items are qualifying during the period? So there's a long list of items. I'll go through each of them just from a high level. The first several ones are particular items that have been previously identified from what we call the point of sale provincial rebate perspective for anybody selling into the provinces of Ontario, Newfoundland, New Brunswick, and PEI, Prince Edward Island. Those are children's clothing and children's footwear, children's diapers, children's car seats, physical books, and printed newspapers. So anybody that actually currently sells these items into those particular provinces may already be aware of the rules that pertain to these. And the provincial portion of HST is currently relieved. And during the break, the federal portion of HST will be relieved. And for the other provinces, the GST will be relieved during this period on those items. There are additional items, and they are Christmas trees and other similar decorative trees. They will receive the GST HST relief during the period. Also, there's several types of toys and similar products, games, and there's specific rules about which ones qualify, but they are zero rated when they are sold, or they are for use by a child under 14 years of age, and it's for the purpose of learning or play. In addition, jigsaw puzzles, video game consoles, controllers, and video games that are sold in a physical form are relieved of the GST HST during that period, during the period I highlighted. And as well, sales of food, non-alcoholic beverages, and certain lower alcohol content beverages are also relieved of the GST during the period. And this is the case whether it's qualifying items are bought at a store, or also if they're provided at an establishment like a restaurant or a bar. So there are two main conditions that must be met for the GST HST relief to apply to these qualifying items. So in respect of qualifying goods, the goods must be delivered or made available to the customer during the eligible period. But in addition, all payments in respect of those goods must be received by the supplier within the eligible period. If those two conditions apply, then there will be relief of GST. The secondary one is dealing with situations where you have services, and those relate to the provision of prepared food and beverages supplied at an establishment, such as a restaurant or a pub. In those cases, the qualifying meal or qualifying beverages must be provided to the customer during the eligible period. And the customer must pay all of the amounts owing for these services within that eligible period. And as mentioned then, if both of these conditions are met, the provision of the qualifying goods or services is subject to GST HST relief. So the way these particular measures work is that the nature of the relief is that these goods and services are treated as a zero rated supply under the Excise Tax Act. And the Excise Tax Act is the legislation that governs the application of GST and HST in Canada. So in these circumstances, no GST or HST will apply to the transactions, as the supply is considered to be made for taxable purposes, but the rate of tax is 0%. So what this means for a business is that business is making taxable supplies, but that means they're still entitled to claim the usual input tax credits for the GST HST that they pay for acquisitions that are used in their business to provide these goods and services that are taxed at a 0% rate. So for businesses, this will ensure that there's no embedded tax in the goods and services that they provide. Okay, it's going to be zero rated on the sales, but they will continue to get the input tax credits on their purchases. And keep in mind, the concept of a zero rated supply is not new to the GST HST environment. Many businesses already currently make zero-rated supplies. And these can be types of supplies that might be a grocery store that would supply basic food items such as fruit or vegetables, or potentially exported items for businesses that supply their goods and services to customers outside of Canada. So the zero-rated treatment for the qualifying goods and services during the period, it's not limited just to sales to customers at the retail level. The treatment applies throughout the chain. So for example, for a qualifying good such as children's clothing, a manufacturer will zero rate the supply of the qualifying clothing to a wholesaler. Then in turn, if that wholesaler makes a zero rated sale of the item and it's within that eligible period, that will also be zero rated. And ultimately, if the retailer makes this zero rated sale to the consumer, if again the qualifying goods are sold during that eligible period. In addition to this, where qualifying goods are imported from outside Canada by businesses or consumers, the importation will not be subject to GST HST upon the importation to the extent that that importation occurs during the eligible period. And the Canada Border Service Agency, they're updating their systems to ensure that the relief is provided on those qualifying goods. I'm now going to turn it over to my colleague, Francois Delaurier. Thank you.
Thank you, Lloyd. My name is Francois Delaurier. I'm the Director of the GST HST Returns and Rebates Processing Division in the Business Returns Directorate at the agency. I'm going to quickly touch on reporting. For businesses and GST registrants, there's no new or extra reporting. It's going to be the same as all. There's not going to be any extra lines on your GST return or anything like that. Registrants will claim input tax credits, report and remit the GST as usual. But it is important to remember to include the GST collected if it was charged in error, still included on your return, unless, of course, it was refunded to the client. Then you make an adjustment. So, as always, the legislation allows for refunding of GST paid in error or it returns. When you do so, please make the adjustment in the return for the reporting period where you make the adjustment. Of course, as always, keep all your records. For customers, if they paid tax in error, we are continuing with recommending that they request a refund from the retailer or the business. This is what we do now. We're still going to recommend that course. However, if they're unable to get a refund, we ask them to save their receipts and they can file a rebate application. And the rebate application is the GST 189 reason code 1C for amounts paid in error. I will now turn it over to Sahil.
Thanks, Francois. Hello, my name is Sahil Behal. I'm the Director General of the GST HST and Digital Compliance Directorate within the Compliance Programs branch here at the CRA. So from a compliance perspective, we already have existing GST HST processes in place, and largely these will be leveraged to the extent possible to administer this new measure. Businesses should make every effort to comply with the new GST holiday measures and ensure their point-of-sale systems are updated to allow for the proper GST HST treatment. We recognize the timing of the measures given the holiday season and the short lead time, and that it presents challenges for businesses. The measure is still in its early days and we're still finalizing our compliance approach, but I'll share some details with you now. So part of the work that's ahead of us is working with stakeholders to understand their questions and concerns. Generally speaking, the CRA will take a practical approach to compliance. We will be dedicating our efforts towards a situation in which businesses willfully and egregiously refuse to comply with these temporary measures. Businesses who make reasonable efforts to comply with the legislation will not be the focus of our compliance actions. The CRA will do what it can to support businesses in complying, ensuring information regarding the measures and applicable GST HST treatment is made available on our website. We're also leveraging existing relationships with the stakeholder associations that we have to share important information related to the measure and answer questions they may have. Penalties will only be levied where a registrant knowingly or under circumstances of gross negligence makes a false statement or omission in a return on an invoice. I will now turn it back to our moderator, Yannick.
Thank you, Sahil, François, and Lloyd. I think that gives us a really, really good overview of the measure. I will now take some questions from our invited stakeholders. First, I think we will bring Alicia Lee from the Canadian Federation of Independent Business to ask her question to the panel.
Thanks so much, Yannick, for having me today. One of the questions that we've received from our membership is, for example, a teacher who operates a resource center where they sell science kits and supplies, or even craft kits and supplies, those that include graduated cylinders, magnetic marbles, or even paints and markers. Given that toys for under 14 years old are described as being for learning, play, involve building, creating, assembling, etc., is it safe to say that these items, perhaps even including the graduated cylinders, would be part of the tax holiday?
That's a great and very complex question. I will turn it over to my friend Lloyd, who is the tax expert, and I am a comms one, to answer your question.
Thanks, Yannick. So Alicia, yes, when we have something that's a science kit or a arts and craft kit, and that they would consider to be toys in the general sense, the key is where those toys are designed specifically, or not specifically, but they're designed for children under 14 years of age. They would qualify for the GST HST relief during the period, because they're considered to be toys that create objects by using pieces and materials, and they would fit into the zero rated category. The graduated cylinders would also be zero rated as for the similar reason. The challenge might be, though, if you're looking at supplies such as paint or markers that are sold outside of the kit separately, and they're not necessarily toys themselves, then they would not be subject to the GST HST relief.
Great, thank you very much. Another item that we received was for physical game media. When it's referred to, does this mean accessories associated with a video game console? Now, I know that controllers are, however, an electronic dance mat, perhaps, or a specialized tennis racket that attaches to a game console. Would those also be included in this initiative?
Yeah, so if a dance mat or a specialized tennis racket would be considered to be a controller, they would both meet the criteria of a video game controller that's used to control the video game used on a video game consoles. So those types of items are zero rated. Other accessories may not be, but if it's in this case like something like a dance mat or a tennis racket, controller would.
Excellent. Thank you very much, Lloyd.
You're welcome.
Thank you, Alicia and Lloyd. I will now give the microphone to Jessica Brendan-Jepp from the Canadian Chamber of Commerce for your questions.
Thanks, Yannick and team. I know that this has been on very short notice for you, so we appreciate the opportunity to ask you some questions. I think, as you can imagine, businesses are sort of struggling to adapt to this, and I think we've heard some pretty detailed examples of from my colleague at CFIB on how specific products are getting. I'm wondering, not everyone is going to have the ability to attend this kind of call. So I'm wondering what support and or leniency will be provided to businesses who are having trouble determining the eligibility of products or services. We hear from businesses often that the CRA auditing process is a bit daunting for them and complex. So I think there's a lot of businesses out there who are nervous about getting this wrong and are going to want some support. So just wondering what will be available from the CRA's behalf.
Thank you, Jessica. I think for the first part of your question on compliance, I'll turn it over to Sahil to give us an answer.
Thanks, Yannick, and thanks, Jessica, for the question. We definitely appreciate the timing of the measures and how it presents challenges for businesses. Generally speaking, files will be examined on a case-by-case basis, but what I can share is that from a CRA perspective, we are taking a practical approach to compliance, and it's important to note that GST registrants and businesses that are making reasonable efforts to comply with the legislation are not going to be the focus of our compliance measures. And I'll pass it over to my colleague Lloyd to talk a little bit more about the support we'll be offering businesses.
Thanks, Sahil. So we have our website, which has our webpage that we are continually updated. We even updated it this morning, and we will be keeping to provide information. And as more questions come in on some specific issues, we are working towards having some questions and answers that can also be made available publicly. And so we are continuing to update the information that we have there.
Okay, great. And if I could just ask a follow-up, Yannick, is that okay?
Absolutely.
Okay, great. And will there be any sort of, like, obviously that's sort of a one-way feed of information, but if businesses don't see a product or service that's on the website, will there be an ability to sort of call in with a dedicated hotline to speak to a human about that, or is that
Definitely.
something?
Right now we have our 1-800 numbers, which we will make available. I don't have the number right in front of me at the moment, but obviously for all our inquiries that you have, you can utilize that currently. We have staff that are manning those phones. We've educated them on how the holiday rules should be working. So that should definitely be happening. Yeah.
Okay, great. Thank you. And
you're welcome.
My second question was just around the communications or literature directed at consumers that retailers can display, just to make sure that there's no confusion or backlash from customers. Obviously, getting your message out to businesses is key, but Canadians are a tougher audience to reach sometimes. So, wanting to make sure that there's some materials there available, because I know that is a concern we've been hearing from businesses as well.
Absolutely, and as the comms guy on this call, I'll take that one from you, Lloyd.
Thanks,
and give you a little bit of a break. Obviously, as Lloyd mentioned, the webpage is going to be obviously where we want to send as many people. We're really working hard at updating that constantly as new information becomes available. We've also prepared a shareable, which will be available on the website that can be printed or saved and shared with your customers or clients. It will also be shared, I believe, once we obtain royal assent via our stakeholder, that's a mouthful, our stakeholder desk message service. We will be sharing with all of you at the end of the presentation. We have a specific link where you can go and sign up and receive stakeholder desk messages based on what industry you're in. So I would encourage everyone on the call, the stakeholder organizations, if you don't already get those messages, to go in and sign up, and that'll ensure that you get direct communications from the agency when we do have messages that are specific to your industries. And please keep checking the website and our social media also. We'll be trying to be as open and as quick in communicating as we possibly can.
Thank you. That's helpful.
Just to add, Yannick, in the meantime, I've gotten the phone number, so I'll let you know what the number is. So the English line is 1-800-959-8287. The French line is 1-800-959-8296.
Thank you, Lloyd. I will now turn it over to Mr. Richard Alexander from Restaurants Canada, joining us from beautiful downtown Toronto, Ontario.
Not as beautiful as it was yesterday, but anyway, we'll go with this. Yeah, thanks, Yannick and the entire team at CRA. I know that this was short notice, and you guys have done an absolutely phenomenal job putting this together, and I appreciate all the support. My first question, I'm only allowed 2 questions, so I've got a first question that has 2 parts to it.
Sneaky.
We're getting a lot of questions about input tax credits related to suppliers. So I think, Lloyd, you said something about wholesalers will be zero. The tax will be zero rated for them. So if a restaurant is buying product from a wholesaler, my first question is that are they going to be paying HST on that if it's zero rated? And then the second part of the question is, what proof of delivery is expected to be maintained to support that the delivery was made during the eligible period? And what proof is expected to be retained with respect to payment for the exemption period? Some of them are on credit, right? Some of them are lines of credit and things. Does that make sense to you?
Sure. So the let me just remind myself. So the first question was about a wholesaler selling through. So the input tax credits will continue to maintain throughout the chain. Nothing will change on that front.
Okay.
So the difference will be that instead of tax being charged on that transaction, it'll be zero rated, but it will not impact the supplier who is now making that supply to the say the wholesaler to the retailer. The wholesaler will continue to get their input tax credits on everything else that they purchase. The zero rating is just it's a treatment that says that basically you don't charge any tax, but you're allowed all your input tax credits that you'd be otherwise entitled to. So that's the only differentiator. This does not impact your input tax credit entitlements at all.
Okay, so the restaurant at the end of the chain, if you will,
Yep.
They will be paying HST, GST on the products they're purchasing from the wholesaler. And
they will unless they're zero rated, right? So if
Okay.
the restaurant is purchasing food for them in preparing the meals, the food will be zero rated during this period, so they shouldn't be charged tax during the period. They may have food that they've acquired though before the period, so they'll still entitled. They would pay tax on that and be entitled to input tax credits on that.
Okay. So what are some of the things in terms of proof of delivery made during the eligible period, proof of respect to payment and things like that? My understanding, it has to be paid for by the end of the holiday, correct?
Right. So Francois, did you want to? Well, actually, it's more for Sahil, I guess, and
yeah.
Thanks. I think from a compliance perspective, and we'll be able to share this after the call, we do have information available externally with respect to ITC entitlements. So for input tax credits, kind of the documentary requirements that are required, and the same information would apply to this legislative measure as well, if the bill is enacted.
Okay. Yeah, we're getting a lot of questions on that. So anywhere I can point people toward answer around that would be great. Okay, my second question has to do with gratuities, obviously in the restaurant industry. So gratuities in terms of direct gratuities and control gratuities. And I can provide more clarification if you're not aware of that. Yeah.
No, that's okay. So so I think you also had a question on banquet rental fees as well. That was the title. Yeah. So banquet rental fees will continue to be taxable.
Yeah.
In terms of gratuities, so the way I look at it, and correct me if I'm wrong, it's sort of optional or mandatory. Would that be the two categories? So so the rules that apply today will continue to apply those. So if you pay a gratuity on something that would otherwise be zero rated, usually we don't because everything's usually taxable. Then and it's optional. There's no tax that applies on it. It's an optional gratuity. No tax applies, right? But when you paying a mandatory gratuity, and right now the position is when a restaurant supplies a meal, it's taxable, and they put and a mandatory gratuity applies to it, they charge tax on top of the mandatory gratuity. They will not do that during the eligible period because the position is that the mandatory gratuity is like additional payment for the meal. So the meal is zero rated, so the gratuity would also be zero rated. The one unique challenge is if they are supplying the restaurant supplying non-eligible alcohol like spirits or liquors, which do not have the relief other alcohol does, then gratuities that relate to those that sale is, if it's a mandatory gratuity, it attaches the tax treatment to the same tax treatment as to the item. So for those types of items, they would continue to be GST HSTable on those items.
Okay. Excellent.
Okay. Does that make sense? Yeah.
Yeah, it does. Yeah. Thanks, guys. And a quick shout out to all the hardworking restaurateurs on the line there.
Thank you, Richard. Appreciate that.
Thanks.
And now, last but not least, Luke Chapman from Beer Canada.
Thank you very much, Yannick and the team at the CRA for putting this call together. It's already been quite helpful to hear the views and perspectives of the other folks on the line. So this has been great. For those who are not familiar, Beer Canada, we're a national trade association that's comprised of Canadian brewing companies. Our members account for about 90% of the beer produced in Canada annually. as you can imagine, and as it's already been expressed, Canadian brewers, along with our partners in the hospitality and retail sectors, are working quite diligently to prepare for the implementation of the upcoming GST and HST exemption, which begins on December 14th. However, the reality is that there are several uncertainties that do remain. I think a recurring question that we're hearing from our end is exactly how the CRA will treat a very specific scenario. It's when business-to-business transactions, where customers make late payments after February 15th, 2025 for products that have been delivered and invoices that are supposed to be paid prior to the expiration of the sales tax exemption but have not been. And I think, from our perspective, while this situation may not strictly align with the legislation's definition of paid in full, the reality is that is a common occurrence for many businesses and often outside the control of the business that's issuing the invoice. And therefore, that scenario may result in some businesses being exposed to compliance risk related to non-collection of the GST and HST. So again, building off some of the other questions that have already been asked, we at Beer Canada are wondering if the CRA intends to release some form of public guidance to provide a little flexibility to businesses and to support them in navigating these types of very unique scenarios. So that's our question. Thank you.
Thanks, Luke. I think that's an excellent question. Maybe we'll take it in two parts. So I'll give Lloyd the microphone first to speak to some of his parts that belong to that, and then maybe Sahil on compliance to close out.
Thanks, Luke. So we'll kind of look at it in twofold. Like my side is kind of what the right thing to do is, and then Sahil will give you the kind of the audit compliance perspective on it. So it's when the legislation receives royal assent, we are expecting every registrant to abide by the legislation, to make every effort to comply with the rules that are there, which entails, the issue that you've raised is we're aware of it, and it's definitely a practical question. We expect every registrant to attempt to ensure that their compliance is ready by making whatever changes they can to their systems, their charging systems, or their invoicing arrangements. That said, if there's an effort to be made, like if an effort is being made and people are complying, doing their best efforts to comply, and they don't get it right, and the reason why they wouldn't get it right is something outside of their control. We, from a perspective of the legislation, you're supposed to fix ones that you may have charged GST on but did not, and issue a credit or go back and adjust that when circumstances don't happen that would have given rise to the GST side. Now, that being said, I will pass over to my colleague Sahil.
Thanks, Lloyd, and thank you for the question. And thank you for flagging it. I think it's important to know kind of what the challenges that small business and businesses of all sizes are facing. So like I mentioned, like our compliance approach is still in its early days. And that's why as we're developing our approach, conversations such as this is so helpful. We are going to be taking a practical approach to compliance, and really where we're dedicating our efforts are in instances where businesses are willfully and egregiously refusing to comply with the measures. So an example is that they're collecting GST, HST, but not remitting it to the CRA. That is something that we would consider willful non-compliance, and the intent is there. But where businesses are making reasonable efforts to comply, similar to what Lloyd said, what we've said previously, that is not going to be the focus of our compliance actions, and that's kind of paramount interest to us as we're developing our compliance approach internally.
Thank you very much for that, I guess, reassurance, Sahil. That's very helpful. And I think, just from the perspective of Beer Canada, I'm sure from the perspective of other folks on this line, I think it'd be helpful to see that type of language on the CRA website, that when we get inquiries, we can point to something in writing just to provide a reasonable level of reassurance to our businesses. So thank you again for this webinar and for the guidance.
Thank you, Luke, Jessica, Alicia, and Richard. Certainly these conversations, as Sahil mentioned, help us do better. And so that's, this two-way communication is much, much, much appreciated. And we do appreciate you taking the time to come on this afternoon and represent your members with your questions. We hope it was helpful and that we get to do this again at some time. As most of you know on the call, we've also been collecting your questions ahead of and during this session. As you can tell by the questions that we've just gone through, a lot of preparation goes into answering these questions because we do want to be accurate. So we did compile some of the questions that we received ahead of the webinar, and we will be answering some of them in just a few minutes. Obviously, we won't be able to answer all of them, but rest assured that the questions that you have submitted during the webinar and leading up in the last couple of hours will all be looked at, they will be analyzed, and we will use them to make our communications and our web products better. So if we don't get to them here, certainly they will have an impact on the work that we are doing in the next couple of days and weeks as we roll this out. So now I'm going to change a little bit and look at this screen where we do have all of the questions. I think the star of the show here is now going to be Lloyd, who has most of the answers to the questions. We'll try to make this a little bit of a fun and interactive Q&A between Lloyd and myself. We did compile some of the questions a little bit from across the country. We looked at some of the bigger themes that we were hearing. So we did try to bunch and choose questions that represented the reality across the country and really the large themes. So if you're ready, Lloyd, we will get started with a question that came to us from Nova Scotia that reads as such. Is the whole of the HST being paused or just the GST component? We are getting conflicting advice.
Yeah, good question. So yeah, it is the entire HST that's being paused, not just the federal portion. So in the provinces that have HST, it's the full rate. In the provinces that only have GST, it's just the GST.
Thank you, sir. And now from Ontario, and this is a question I had to read a couple of times to make sure I get it right as I read it to you. Confirming that the tax exemption goes to February 15th, 2025 at 23 hours, 59 minutes, 59 seconds. So that's 1 second to midnight. And that the tax starts being reapplied on February the 16th at 0000 and 1 second hours.
Yeah, that is correct. That's the start point and the end point, which is probably something that the restaurants will need to know, and the bars and the pubs will need to know, that when their supplies made at that starting point, that's the beginning of the eligible period, and the ending as well on the other end.
Thank you. And again, the subtleties are always really important. That's why we're glad we have guys like Lloyd on the call who understand these legislations certainly better than I do. And now a question from Quebec. We did translate this from French just because we thought it was a good question. Are products from the Société des Alcools du Québec part of the exemption? It will be difficult to exclude the 5% tax from the retail price and to make it appear on the receipt.
So the answer to the question is yes. I mean, it depends on the nature of the alcohol that's being supplied. Alcohol that's such as beer, wine, cider, and sake are exempt from the GST in Quebec, just the same as in the other provinces during that qualifying period, the eligible period. In addition, prepackaged mixed alcoholic beverages containing less than 7% by volume, you know, the Smirnoff Ices, things of that nature, they're also exempt from GST. The exclusion, the main exclusion is spirits and liqueurs. They remain subject to the GST and HST, and it certainly will apply the same in Quebec as any other province during the qualifying period. I can't speak to necessarily the question about how difficult it is to remove or not, but that is the application of the tax during the period to those types of items.
Thank you, Lloyd. We'll go back to a question from Ontario. Will delivery and administration charges applied with the purchase of food from a grocery, restaurant, or meal delivery service be eligible for the GST HST break?
So it will depend. Typically, when you have a restaurant that supplies the food and the delivery services together to a customer, then the entire bill is relieved of the GST HST. Kind of how when we mentioned the arrangements for the mandatory tips, same philosophy. However, in this day and age, we deal with platform operators, and often in the world where you order a meal from a platform operator, they typically are the ones that are providing the billing services to the customer, the delivery services to the customer, whereas the restaurant is the one still supplying the meal. So the delivery services that are supplied by two different persons, the delivery aspect of it from the platform operator continues to be taxable. There is no relief for delivery services, but the meal from the restaurant will be zero rated. Okay.
Thank you. Again, always a little bit more complicated than we anticipate, but that's why we're doing this. We now have a question from Parts Unknown. They did not declare what province they were from. What is the expectation with respect to determining whether consideration was paid in full for qualifying items on invoices that contain items that do and do not qualify for the HST GST exemption? Clearly, someone way more technical than I wrote that question.
Yeah, so if I'm understanding it, you have an invoice that has both qualifying items on it and non-qualifying items on it. And you're trying to determine when you get a payment, what does it apply to? The position that we've taken is that it needs to be apportioned. So the payments that come in need to be apportioned in the relationship to the two categories of items. So if you have payments that come in that are only partly paid during that period, the proportion that is paid would only relate to the non-qualifying, to the qualifying items, and you may not be able to satisfy your requirement that the full amount was paid during the period.
Thank you, Lloyd. We'll now go back to a question from Ontario. And again, this is a question that we've heard quite a bit or in various forms. We run a hospitality company that does weddings and Christmas parties. For these events, we do food during it. Are we going to have to remove the food from the calculation and charge no HST on it? And then the second part of the question, a lot of these events have already been paid in full, so we likely would have to issue refunds.
So the answer depends on what's the nature of what you're supplying. So I'm assuming with the question that it's what we consider to be one supply for the whole amount. When that's the case for the whole event and part of it is for food, the argument or the position would be that you're not actually supplying food, you're supplying a right to an event, and that's not qualifying. However, if you were supplying individual components, which usually is the case with some of these events, so you can pick and choose, the customers pick and choose which aspects they prefer, and it's not all sold for one single amount, then each individual component is considered to be its own separate supply. So the food that you sell would qualify. Now the challenge here is they've said it was paid in full before the period, so that food wouldn't be eligible for the zero rating because one of the two requirements is the food is made or delivered to the recipient during the period, but it also has to be paid for entirely during that eligible period. And because it was prepaid, that would kick it out of being zero rated.
Thank you, Lloyd. The next question from Ontario, and it's one that I can answer for a change. When will Bill C-78 be enacted? And will the Government of Canada website be updated once enacted versus continuing to reference a proposed measure? Obviously, on when will Bill C-78 be enacted, I do not have an answer. I am not Parliament, and I don't have that kind of crystal ball. That said, as soon as the bill is enacted, we do have a very good communications plan and rollout plan. The websites will be updated and messages will go out. As I mentioned earlier, we certainly will have a stakeholder desk message. I sound like a marketing guy saying that, but please sign up for getting those messages and you will be notified right away. And any other communications products we make available at that time will be delivered right to your inbox. It's pretty rare that I get to answer questions in these Q&A, so I like that opportunity. Gives Lloyd a bit of a break too.
You can answer some of the others if you want.
No, I don't think that's wise, my friend. Okay. We'll go to another question from Ontario, which was busy over the weekend in sending us questions. I like this one too. In all the documents, it says natural and artificial Christmas trees are included. However, we need clarification on decorative trees, which are small trees that sit on a mantle or shelf. Are they also included as part of Christmas trees?
The quick answer on that is yes. So the provision for Christmas trees or similar decorative trees, it isn't based on size. So you could have tabletop Christmas tree decoration that would apply. And it also applies to what's known as Hanukkah bush is also being zero rated. What is excluded in the relief is decorations for Christmas trees, and also certain decorations that might look like that are not in the physical form of a tree. The example we use is a cutout of a Christmas tree decoration that you might put on your wall. Also, poinsettia plants, mistletoe, wreaths, those items are not zero rated. The question is really if it's a Christmas tree or a similar decorative tree and it's in that shape, it doesn't matter how big or how small it is, it will qualify. That's just the way the legislation was written.
So just to be clear, and so I understand, so the shape is more important than the size. So if I were to go to my local woodworking shop and buy a wooden cutout of what looks like a Christmas tree to put on my mantle, that would be part of the GST HST tax break.
As long as it resembles a Christmas tree and is in the same form or shape of it, it is not excluded.
Amazing. See, I could have almost answered that question. There you go. Almost. All right, we're now going to go to a question from Nova Scotia. Does the tax break include room service delivery fees that are mandatory to the guest? And this is another question we've gotten in various forms.
Yeah, and in the same vein as the question that Richard raised about mandatory tips, if the room service delivery fee is mandatory, which it is usually with a meal and you're receiving it in a hotel, then the way it's looked at is that's additional consideration for the supply of the meal. And so if the meal is zero rated, so would do the room service fee.
Thank you. And then another great question here coming in from British Columbia. This one close to my heart as a former owner of a retail establishment myself, and I think it'll be for Sahil to answer this one. If we are left with only the option of removing GST manually on each transaction, how forgiving will the CRA be for a fee mistake? We will be very busy during the Christmas rush and lineups and customers who are likely to get annoyed and impatient. We know human error will occur under this pressure.
Thanks, Yannick, and thanks for the question. We are encouraging businesses to update their point of sale systems. So this could, the transactions and the right treatment can be picked up automatically, but we do recognize that's not always going to be an option, and definitely appreciate the challenges businesses are going through. Typically speaking, the files are examined on a case-by-case basis, so can't get into kind of specific details from that perspective, but it is important to note that we are focusing our efforts on situations where businesses are willingly non-complying or egregiously non-complying, but where businesses are making best efforts to comply and honest mistakes happen, that is not what we will be focusing our compliance actions on.
Fantastic. Thank you, Sahil. Appreciate that. Next question, and it's my favorite, maybe because I'm an overgrown kid, comes to us from Ontario. If I purchase a game or toy that says on the box that it is suitable for ages 6 to 99, will it qualify for the GST HST break? And I'll let my friend Lloyd take this question.
Yeah, so there are certain categories of toys that are included. So I'm just going to assume that it is one of those, and the only question is whether or not it's for the distinction is toys that are designed, certain toys that are designed for use by someone under 14. So I'll just mention the general rule. So the answer is yes. The way the CRA is looking at this is that there are certain types of games or toys that are specific for adults. They're marketed that way, and those are clearly excluded, or for ages over 14. There are others that clearly say that the age. In this case, if it's 6 to 99, that would qualify because it is aimed at children under 14 years old. And if the packaging and the marketing is kind of silent, and it could be used by kids under 14 or adults, we will provide the relief in those circumstances where it's not clear. The main thing is any types of toys or games that qualify but are clearly marketed for someone over that age.
Thank you.
That clarifies it a little bit.
Yeah, certainly does for me. Thank you for that. Just noting that we have only 7 minutes left in our time. I do have a couple of quick questions. Maybe we'll do a little bit of rapid fire because these ones I think are not super complicated. Although I'm sure again I'm assuming incorrectly and things are more complex than they appear. The first question from Alberta is: chewing gum and Hall's cough drops considered food or candy?
So that's me again. Chewing gum is considered candy, and so it would be 0 rated during this period. Halls and other throat lozenges are not considered food by CRA. Okay, they are for medicinal purposes, so they would not be 0 rated because they don't come in as a food, so they would continue to be taxable.
Excellent. Thank you. Another quick one from Alberta, and this one's a little bit more complicated. For hotel packages that include multiple items, room and breakfast package, dinner and drinks, and dance tickets, do we exclude the GST?
So I think I sort of mentioned it earlier with whether or not it's like a single fee or not. So it's the same concept as that if I'm assuming that that's all one single fee and there are components that would have qualifying items, then typically in that situation you are not paying for food. You're really paying for the overall package, of which it's not really for the food. If they're all separated, like if they're all supplied separately and you pick and choose what you want, then each one would be dealt with individually. So the portion that relates to the food and you're paying just for that would be 0 rated during the period.
Thank you, Lloyd. Quickly from Ontario, are baby wipes included?
No.
Thank you. that was.
I didn't mean to say it so.
It's okay.
But they are. No, they're not, because it's really only food or beverage, and it doesn't fall into any of the other exclusion categories.
Okay, even not around the diapers or anywhere in that category.
No, not the diaper. I guess you were thinking of diaper. It's not included in there, unfortunately. It's just diapers, and it's also just children's diapers. Adult diapers are not included as well, right? So.
Okay, perfect. Thank you for that clarification. And the last question from our good friends in Newfoundland and Labrador: does this apply to wholesale sales as well, or is it just at the final consumer level?
I think we already mentioned that, but just to be certain, it is at each level. So it's it's every level in the chain. Okay, so if the item by its nature is meets the qualifying item, it doesn't matter who's selling it. It's the item as opposed to who the customer is.
Fantastic, thank you. And I feel a bit like a game show host. Thank you.
We have one more. We have one more question I saw in the chat from Jessica. I can answer.
Oh, yes. I'll do
Go
that for it.
Yeah.
Thank you.
So maybe you can just. Do you want to?
I can. I think the question that I have here in the chat, I'm looking away. Apologies. Is what qualifies as carbonated beverage? I hope I got that correct, Jessica.
And is there context around that, Jessica? Like if it is a carbonated beverage, it would fall in and it would be 0 rated. Ordinarily, they're taxable, but
Yeah, so there's some beverages that are sort of effervescent, or like, and I'm just wondering what the sort of thought is. Is there a particular sort of
So
carbonation level, like energy drinks, for example?
yeah, so there's a thing with energy drinks though that the people in the call should be aware of, because depending on the nature of the drink, it might be considered a dietary supplement and not a food. Because if they have, depending on the nature of them, if they have warnings, they're not they're not necessarily under our existing policy so they ordinarily might not come in as a food. Now, what I would say is and this will be coming up on the website soon. We have a position that deals with what I would say energy drinks, protein bars, energy bars, and it will really highlight whether or not the distinction is whether or not there's like a DIN number or an NHP number, which are ones that are typically Health Canada has considered not to be foods. But if they don't have those and they compete with other products in the marketplace that otherwise they would be treated as food. And if Health Canada recognizes as food and the average consumer would recognize them as food, then they would be food and they'd be included in this particular zero rated treatment. The challenge is I can't say exactly which ones, because everybody has to look at their own product and make a determination. It would be based on CRA's existing dietary supplement policy that's out there. Okay, so I hope that helps a little bit. But.
Fantastic. Thank you, Lloyd, and thank you, Jessica, for that question, which gives me a great segue, to close out this Q&A section, but also, as Lloyd mentioned, to remind people to check regularly on the Canada.ca GST HST break webpage, because as Lloyd said, we are going to be continuing to update guidance as it continues to roll on. So that said, that will bring our session to an end. I hope you found it informative and useful. We've just shared a link in the chat to gather your feedback on the session. You can also scan the QR code on the screen. We do appreciate your feedback. We look at it closely, and we always try to do a better job when we're hosting these sessions, so that feedback from all the participants is invaluable. I also want, as I just noted, to encourage everyone to continue checking the webpage. I feel like a bit of a broken record, but it is very important and really key to our communications. It is where you will find the most up-to-date information. I'll also mention again that you can follow our various social media channels. We do keep them up to date. And again, I think we've shared the link in the Q&A panel for you to sign up to our stakeholder desk messages, which we will be sending out as soon as Royal Assent is received on this legislation, and for any other major communications that we need. I think that leaves us right on time, 3:29 p.m. It's been a great hour. Another big thank you to the representatives of our stakeholder organizations for making the time and joining us, for our subject matter experts from the agency. A big thank you, and to the whole team, I think behind the scenes, who's worked very diligently over the last 5 or 6 days to put this together. A big thank you. And for all of those of you who joined us, we hope you found this useful. I want to wish you all a great holiday season, and thank you again for taking the time to join us today. Have a great time. Thank you.